It's Thursday, November 17, 2022. Very interesting day in these markets. They are still open. Dow Jones earlier this morning was down 400 points. Went into positive territory. It is down about 86 points as I make this video. So a big swing, more volatility. And we'll talk a little bit more of what I think is happening in the market today and why we're seeing the volatility. But I want to get right into this video. A lot to talk about. And I want to start with this first article, which I think is going to be a big problem here. It's coming from The Hedge. U.S. single-family housing permits plunge to pre-health crisis lows. Single-family housing starts plunge 6.1% month over month. Permits down 2.4% month over month. The Dallas Fed came out today and said that housing prices could plunge 20%. So we're seeing more problems in housing, and this is going to be the next shoe to drop, in my opinion. And when we see housing really begin to implode, prices coming down, we're going to see a lot more equity vaporized in the housing market. And this means that wealth is going to be erased in a lot of households across America. I think last quarter it was $1.3 trillion that was vaporized in home equity. And we're going to continue to see more home equity vaporized in this housing market. St. Louis Fed President James Bullard says rate hikes have had only limited effects on inflation so far. I think this is what troubled the markets this morning, but they're ignoring what he is saying because the market came back, went into positive territory, now down 88 points on the Dow. But James Bullard said the policy rate is not yet in a zone that may be considered sufficiently restrictive. He suggests the proper zone for the Fed funds rate could be in the range of 5 to 7%. We're right now currently at about 3.5, 3.75% at the moment. But the markets didn't like that, down 400, then back up into positive territory, down only 88 now on the Dow Jones. So they're ignoring so much of what is happening. They're ignoring what James Bullard is saying. They're ignoring what's happening in housing, especially ignoring what is happening in the crypto sector right now and the crypto collapse. Here's one from CNBC. Average 401k balances plunged 23% year over year due to market volatility, Fidelity says. What happens in 2023? What if it's worse? What if it's another 23%? Are you willing to lose 50% of your 401k by next year? Some people have already lost more than 23% year over year. But what if this continues to be a problem? How do people retire? What are they going to do when more equity is vaporized out of their homes, more losses in their 401k and their retirements, savings wiped out? This is going to be a horrific 2023. And all I can say is what I say on a daily basis: prepare the best that you can. Here's another one. Report: FTX could owe more than 1 million creditors. We don't know how bad this is, ladies and gentlemen. And to me, it's amazing. I don't know about you. Comment down below. It's amazing that the markets are ignoring what is happening with this crypto collapse, what's happening to FTX, what's happening to these huge losses to these creditors, hedge funds, pensions, banks, you name it. We don't know how bad this thing really is, but the markets just seem to ignore it. Here's another one. Shock. California projects $25 billion deficit after $98 billion surplus. This is going to get worse for the state of California, where I'm coming from right now, as this recession deepens. We were flush with cash just a couple years ago. Now we have a $25 billion deficit. A couple years ago, they were giving people $400 gas checks. Just recently, up to $1,050 checks for people that needed gas. Where did all the money go? Why are we now going from a $98 billion surplus to a $25 billion deficit? Where is the money at? Where did the money go? What is going on? There's just no responsibility. There seems to be no consequences and no answers for the disappearance of all this money. Where is the money? Here's one from Market Watch. It's titled, "We've only just begun to see layoffs and squeezes on profit margins," warns Wells Fargo strategist. Just reading this tells me that we all have to prepare like we're going to lose our job tomorrow. Prepare for the worst. Prepare like you're going to lose your job tomorrow and hope for the best. Strong spending at restaurants gives no sign of recession. This on Market Watch. I blame a lot of this on credit cards and HELOCs, people using their homes as ATMs, people running up massive credit card debt just to keep the party going, to keep their standard of living going, to be able to go out and eat, to be able to take a vacation. People are still spending money. They're going out and they don't care. One of the things that Americans do when the economy falls into a funk is they go out to eat less. They cook at home more. And that's not what is happening right now. Sales at bars and restaurants increased 1.6% in October, rising 8 out of 9 months. Sales are up 14%, inflation at 7.7%. This article points out that, well, this isn't inflation. The sales being up 14%. That's not inflation because inflation's only 7.7%. Well, I don't believe, and you don't believe that inflation's 7.7%. We believe it's double, triple that. So this article points out, makes a point that, well, sales are up 14%. And that's not because of inflation, because inflation's 7.7%. But this article doesn't point out the real inflation numbers, which are 15, 20%. And that's why I think we're seeing sales up, but people are acting, in my opinion, very irresponsible here, very reckless, because we know a lot of this is the use of credit cards, people spending with money they don't have, and it is inflation, because inflation is up double that 7.7%, maybe even triple. TheEconomicCollapse.com. U.S. consumers are doing exactly what they did just prior to the crash of 2008. Households added $351 billion in overall debt last quarter, now totaling $16.5 trillion. As the economic activity slows, consumers are piling on debt. This is the worst possible time you want to be taking on debt. And they're taking it on at a stunning pace. In particular, mortgage debt and credit card debt. So many Americans, ladies and gentlemen, are so overextended right now. And people will tell me, oh, the restaurants are packed, the bars are packed. They may be. Some of them very well may be very busy right now. Question is, can people actually afford to be there? How are they paying for it? Look, I look at social media daily. I see people showing me their $25 cocktails, their $100 steak dinners, their lobster tails, their crab legs. Just life is a party. But how are they paying for it? And as long as people can tap into credit, they're going to keep spending. And they're going to spend with money they don't have. And unfortunately, the piper must be paid. And at some point, the debts have to be paid back. And I don't know how these people are going to do it. And more than likely, many of them will not be able to pay it back. And this is why we're going to have a crisis situation. This is why this ends in a very catastrophic way. This is why so many people are going to end up homeless. The homeless numbers continue to grow. And a lot of it is because people are just reckless and they're making horrific decisions right now. They're not being fiscally responsible. And if you have kids, you gotta be extremely responsible right now. You gotta pull it in. You gotta be cautious of what you're spending it on. You cannot be spending more than you're taking in. And that's what people are doing. They will not give up the lifestyle, especially these people on social media who just want to impress us with the parties, the food, the drinks, the vacations, what they're driving, the zip code that they're living in. And these people are going to be the real victims here. So many Americans, again, have overextended themselves, to eat at that restaurant, to go to the football game, to buy that house, to drive that car, to live in that zip code. And soon, these are going to be the same people underwater. These are going to be the same people knocking at your door for help. These are going to be the same people that don't have a plan. They don't have a way out. They're going to go down with the ship. And it might be funny now. It might be a big game right now. But these people are going to learn an extremely valuable lesson here. And it's going to be one that is going to be very, very hard to come back from. The New York Fed is telling us that there are 555 million open credit cards in the United States, right here in America. 555 million open credit cards. Think about that number. The US population is 329 million, and we have 555 million open credit cards. You want to know how people are going out to eat? You want to know how people are putting gas in the cars right now? But don't forget, 20 million households last month couldn't pay their utility bills. 37% of small businesses could not pay their rent last month. Don't forget that. Jeff Bezos told CNN, hope for the best, prepare for the worst. That's probably the best advice anybody could give you right now. And Jeff Bezos is saying that. Jeff Bezos is telling you right now, hope for the best, prepare for the worst. And I think, like I said earlier, you have to start preparing like you're going to lose your job tomorrow. That's how we have to start living. We have to be living way below our means. Got to be putting money into that cash reserve. Got to be paying off the debts. Got to have some assets put away. And you got to have a plan in case something bad happens. The dominoes are beginning to fall, ladies and gentlemen. We are going to see bubble after bubble burst in this country. Bond bubble, stock market bubble, real estate bubble. They're all going to burst. And most people are not prepared. You must be preparing. And when I read an article like this, it just reinforces with me, I'm sure it reinforces with you, why we must be preparing. Organized crime looters steal astounding $400 million in goods from Target stores. So far this year, they have stolen $400 million just from Target stores. How bad does this look as this economy continues to erode, continues to decay, as we watch the social morality of the U.S. continue to decay? How bad can this look a year or two from now? Think about that. You are watching society break down right now. Could you imagine during the Great Depression, back after the 29 crash, the Great Depression, where people had to really come together, families had to come together, just strangers had to come together, the country really united. What do you think it would look like if we had a 1929 crash tomorrow, or the lights went out in this country? You're not going to have too many people coming to help you. So many people now are so narcissistic. People in your family, your friends, your church, so many people just doing some of the most demonic things we've ever seen. You start taking food away, the power goes down, you're going to be dealing with a real social disruption, because people today are not like the people back in 1929, 1930. This society is going to be every man and woman for themselves. Crime right now is just off the record. It's record breaking. It's just off the charts. And imagine what it would look like if the power went out or people were unable to get food. We would see such a societal breakdown. And if you think crime is bad right now, you ain't seen nothing yet. Wait till it happens, because that's where this is all going. As more people get laid off, as we see more of a threat of cyber attacks and grids going down, as we see more of a threat of food shortages and a food crisis, and people are just so divided, and people are very, very angry. And you see the crime that's taking place right now. What would it look like if the power went out and people just couldn't get food? It would be chaos. It would just be chaos. You need to be preparing. And this is why you should get your food now, get your gear now, get the essentials now, so that you don't have to go wait in line at the worst possible time, because that's when it's going to be dangerous. You don't want to go to a Walmart when the power's out, or when there's a food shortage or a food crisis taking place, when tempers are flaring people are just going crazy. You don't want to be in the parking lot. You don't want to be in that line. You want to avoid that at all costs. And if you start preparing right now, you can avoid that risk, because that is where bad things are going to happen. I'm going to close with this last article coming from The Hedge. New online tool maps out 867 U.S. military bases worldwide. I close with this. This is why, or one of the big reasons why America is broke. 867 U.S. military bases worldwide. And this is why we're going to see a collapse of the dollar, because the world is sick of us printing money, building military bases all over the world, starting wars all over the world, and weaponizing the dollar. And so this is going to be another reason why you better own gold, you better own silver, you better use those dollars right now, that monopoly money, to buy real things, to buy the gear that you need, to buy the essentials that you need, to buy the assets that you need, to buy the acres that you need, to buy the preparations that you need. Because look, I have dollars right now, but at some point dollars will be worthless. So maybe it's a good time this week, this coming weekend, to take some of those dollars and buy real things. I'm not telling you to get rid of all your dollars. You're going to need dollars for a while. But at some point, we're going to see more fiat currencies crash and burn, and the dollar will be one of them. And at that point, it's going to be a matter of what you own, what you can get to, how many ounces you have, and that's it. So be prepared, ladies and gentlemen. The world is changing extremely, extremely fast. And when I see the amount of crime that is taking place, when Jeff Bezos is coming out and telling you to prepare for the worst and hope for the best, when you see what's happening now in real estate, I think real estate could be down in some areas much more than 20% next year. This market is going to crash. Stocks, bonds, real estate, and heaven forbid the dollar. But at some point, the dollar is going to collapse also. I don't know when that's going to be. I don't know when any of this is going to be. But right now, we are beginning to watch the beginning of the dominoes fall. And you can sit around and do nothing, and that's your choice. That's up to you. Or you can take action and begin to prepare right now. And I hope that you've all been preparing for a while now, because the more prepared you are right now, the better the better situation you're going to be in. Put the odds in your favor. It's all about odds. Nothing's 100%, nothing's foolproof. But you got to be multidimensional right now in your preparations. And the more you can put the odds in your favor, the more you're going to prosper and benefit during this crisis, during this collapse, and the safer you're going to be financially and physically. So I'll leave it there today. God bless all of you. Please make sure to like this video, share my videos all over the place, and make sure you subscribe. God bless every one of you. I look forward to speaking with all of you very, very soon.